Okay, so in this video, I'm going to be doing a trade breakdown on a trade I took on the Ger40 or the DAX, whatever you want to call it. So this trade was taken via my new swing strategy that I've developed. So I've been developing this for the last couple of months, I believe. I've got 10 years worth of data, so 2 years on 5 different pairs, DAX being one of them. Overall, it averages 58% a year return with a 53% strike rate. So yeah, this is one trade I took. Other members in my course took it as well. One guy, it was his first trade after joining, and he took 5.8% from it, I believe. So yeah, let me just get to where the trade was. So in terms of what is involved, it is basically the same concepts as my 15-minute strategy, which I will still be trading. This is just an added extra to trade in alongside or on a different account, because there's not really much to it. You're averaging like a trade a week, I think, overall per per asset. So yeah, in terms of how many trades or trade volumes, not many, and the time needed on the chart is not much at all. Plus, in terms of the concepts, there's not really much to it. In all honesty, it's mainly just structure. Um, so yeah, it's basically like my 15-minute strategy, but even more simple. That's a really simple strategy, but this is even more. So first point of call is to identify structure. So DAX as a whole is very bullish in general. It's in indices. So you can see, just zooming out, it's very bullish. Yet the odd time where you get a sustained pullback or sustained bearish run, but overall it's just trending upwards, which we kind of see the same thing occur here. So trending upwards, we have a small pullback and eventually go back bullish. So just mark up the structure. So very strong push to the upsides. Our break to the downside happened here, so we went bearish at this point. We then get a second break of structure, a third break of structure, and then we broke this high here. Now typically I wouldn't like to use this as my swing high. What I like to see with my swing structure is it either pull back a significant amount. I don't have a set amount of pips or a set amount of candles. I kind of play it by eye, or it runs liquidity and then break structure. Now none of these two highs do it, but I have to use this because otherwise I'm going to be using this high up here, and at that point my swing range becomes ridiculously too big, so I'm not going to be using that. I'm going to use the most relevant high, which is this high here. So at this point we broke to the upside, but now back bullish. Kind of get a similar break of structure here like we saw here to the left, a tiny pullback and then a strong impulse. Now what would my swing range be? Technically it should be, let me tag here, technically it should be this, but that's again too big because I think there's too much price action in between to then where I think we would go bearish in between this. So I'm going to use the most relevant high I can, and that's probably, sorry, most relevant low, and that would be this low here. This one isn't enough, and I've got this one that's pretty close next to it. It's not too big of a range. If I was to take out this low, I would imagine this low and this low get taken out as well. So that's how I kind of cheat swing structure when it's needed to. In this instance, I think it was needed to move this as my swing range. So looking at this range here now, we're bullish. I'm going to wait for a sweep of liquidity or a run on liquidity. It doesn't have to sweep it as such. But yeah, I'm waiting for a low to be ran in this instance. So we have a low here, and we have our low all the way down here. Now I could have something built, so we could maybe range, maybe then take this low here and then go. That would be absolutely fine. However, as we can see, moving on, we've now traded below this area of liquidity. So I'd have a an alert set here so once we trade below this here. Now unfortunately it was a really strong bearish push, which is okay, but they're not as nice to try and trade from. So what I did in this instance is just wait for the next 4 hour candle to see how this one closed, and then we had a bullish candle close here. So here I thought, okay, there's a good chance this could be a run on liquidity. I've now got a bullish close on the 4 hour. I can now look to take a trade. If we look at the 1 hour time frame as well, it's like ran that and then taps into this wick here. This quite nice wick. So in terms of supply and demand, I will use it a tiny bit, but it's not. It's kind of like a confluence. So we have random liquidity, and we have tapped into this area here, which on the 4-hour time frame is a buy to sell wick. So ideally, I would have traded below this here and then looked to get in on the 1 hour, but because of how strong the push was, I waited it out for the next 4-hour close, which was at this point now. So the 4 hours closed bullish, so I thought, okay, there's a good chance we could now reverse. And all I've done is simply just market execute from where the 4-hour candle closed to the low, cover the low by my standard stop loss buffer, and my target was the 4-hour high, swing high, which should be weak. Now the most optimal candle I would get in from would be this one here. As you can see, there's not much difference in terms of where I'm going to be entering from. So just market execute, no problem at all. We're in from there, and the risk reward, well, let's see, was 5.67%. So just a little recap. Bullish structure. I've identified an area of liquidity here, here, or I could have had something built. Once we trade below that, I wait for the 4-hour candle to close. Unfortunately, the first candle closed very bearish, so I was a bit hesitant. I believe if I tried to get in, which I could do, regardless even if it closed below, but because of how aggressive it was, I waited. But yeah, I could have still played it, and I would have taken a loss here, I believe. Yeah, I would have taken a loss there. But I waited it out for the next 4-hour candle to close. A little bit of an extra confluence. Wait for the next 4-hour candle to close, and then it's market executed at that point because I'm trading above the last hour candle that was the lowest point, if you understand. So yeah, in from this trade at this point now, targeting the swing high, and as you can see, there we go, pretty smooth sailing the whole way. Didn't have any major pullbacks, so 5.67% overall. Now it was holding the last little bit through US dollar CPI, which does affect the DAX. As you can see that. I'll show you that in 1 minute. So quite a big reaction, to be fair. However, with my testing, I didn't really bother with US dollar news for the DAX. Obviously, with other pairs that are dollar related, I did. So holding through these sorts of news in terms of the DAX is fine. If you really wanted to, you could have closed beforehand for, let's have a look, say we close on this here, this hour candle, 5.1% minimum. Holding it through that little bit of news, 5.66%. So that is literally all that is to the strategy. So hopefully you enjoy the breakdown, and I'll see you guys in the next one.